Hey guys, this is Crypto Marie. She does it all, a little bit of everything. I'm going to read this information to you guys about the US dollar losing its strength. De.dollarization has begun. This is the title. Last week, China and Brazil reached an agreement to settle trades in one another's currencies. Over the past 15 years, China has replaced the United States as the main trading partner of research, which Brazil, and as such, that shift may have been in, inevitable, but within the context of recent circumstances, this appears to be another in a series of recent blows to the central role of the dollar in global trade. As the world's reserve currency, the US dollar is essentially the default currency in the international trade and a global unit of account. Because of that, every central bank, treasury, exchequer, and major firm on earth keeps a large portion of their foreign exchange holdings in US dollars. And because holders of dollars seek return on those balances, the ubiquity of dollars drives a substantial portion of the demand for U.S. government bonds and the world financial markets. The switch from dollars to a yuan real settlement basis in Chinese-Brazilian trade is only the latest in the growing trend. Discussions on a more political, neutral reserve currency have gone on for decades. The profound economic disruption experienced by Iran and more recently Russia after being evicted from dollar-based trading systems like SWIFT, however, have led many nations to consider imminent contingency plans. India and Malaysia, for example, have recently begun using the Indian rupee to settle certain trades, and there have been perennial warnings about Saudi Arabia and other energy exporters moving away from the dollar. On that note, China also recently executed a test trade for natural gas with France settled in yuan. Jesus Christ. DXY index 1980 present. It's not just the conscription of the dollar in economic warfare, but increasingly error fraud monetary policy regimes that are driving various interests away from the greenback. The monetary policy response to the 2008 financial crisis saw the dollar's value wiped around unpredictably, and the response to the outbreak of COVID was even more frantic. The massive expansionary response to the pandemic in 2020 was followed by an initially dismissive posture toward the outbreak of inflation, which reached 4-decade high before an aggressive contractionary shift and a policy that destabilized precarious financial institution was implemented, simply replacing the fiat currency of the largest economy in the world with the fiat currency of a smaller economy is hardly a viable replacement strategy. Moving away from the dollar brings substantial barriers to exit as well as network effects to overcome. Owing to historical, technological, financial, and habitual obstacles, the US dollar is the facto currency of East Timor, Ecuador, El Salvador, the Federated State of Micronesia, the Marshall Islands, Palau, Panama, and Zimbabwe. Further, the comparatively relative transparent conduct of monetary policy in the U.S. has led no less than 22 foreign central banks and currency boards to peg their currencies to it. and dollars are the cheapest means of access to acquired, normally risk-free U.S. Treasury instrument. Bloomberg Dollar Spot Index 2005 present. Some of the twists being discussed to provide alluring dollar replacement are cryptocurrencies. Okay, central bank of a given nation or region's competitive advantage. The latter scenario, in which, for example, certain African nations would trade in currencies backed by titles to rare earth metals, some South African nations in currencies backed by copper deposits, and so on, is interesting but faces substantial hurdles. Nevertheless, a conference in New Delhi last week focusing on increased cooperation between Brazil, Russia, India, China, and South Africa touched on just such a plan. Variations of such a currency order have been dubbed Bretton Woods III, and some non-commodity proposals bear a curious similarity to the since discarded Facebook currency plans first called Libra. This is crazy what's going on. Owing to the role that dollar pervasiveness plays in the international appetite for U.S. Treasuries, a side effect on the long-term attempt to establish alternative reserves currencies may be decreasing interest in tradable U.S. debt over shorter time frames that would likely result in a higher yields and higher level of debt service on securities issued by the U.S. Treasury. Over a generation time frame, that shift could force a reduction in U.S. government spending. Should that scenario play out, the long-term effect of using access to dollars as a blockchain of American foreign policy could well be higher average inflation and or higher tax on American citizens. Jesus. That's a lot. The dollar in some shape or form will likely be around for a long time, perhaps very long, but by weaponizing dollar dominance and permitting expanding mandates to disorient U.S. monetary policy, the dollar's face as the lingua franca of world commerce over the long haul may already be sealed, so long as the political will do more U.S. fiscal and monetary policies to those consistent with the Constitution of sound money remain an incontrovertible matter. The de-dollarization will proceed, and slower or more quickly, the dollar will lose ground abroad. Yeah, it's crazy, guys. It's crazy. Let's see. It's 7 minutes, and let me see how much more. Okay, it's a little bit more. We're gonna finish it. Give me 1 second. Peter C. Earl is an economist who joined AIER in 2018. Prior to that, he spent over 20 years as a trader and analyst at a number of securities firms and hedge funds in the New York metropolitan area. His research focuses on financial markets, monetary policy, and problems in economic measurement. He has been quoted by the Wall Street Journal, Bloomberg, Reuters, CNBC, Grants, Interest Rate Observer, NPR, and numerous other media outlets and publications. Pete holds an MA in Applied Economics from American University, an MBA Finance, and ABS in Engineering from the United States Military Academy at West Point. General Institution Consideration of Blockchain and Emerging Applications, co-author with David M. Okay, does that have anything to do with what we just read? I don't know. Forgive me. Yeah, have a wonderful one. Later. Bye. Subscribe.